to the AJ Brown Show, where we talk about all things investing, options trading, and the like. Now here's your host, AJ, whose primary mission in life is to help you become a better investor.
All right, ladies and gentlemen, welcome back to another episode of the AJ Brown Show. My name is Cyprian Francis, and with me, as always, the main man of the hour, AJ Brown. Good morning, AJ.
Hey, everybody. Good morning. Good morning, Sip.
Today is July 14th. This is episode 89. And right off the bat, we're talking about inflation. I feel like that's the key word for the week, inflation. And then we're starting to get some earnings. We're in the middle of the summer doldrums. Where should we begin this wonderful journey for today?
I mean, let's talk about economic news because on Wednesday we got those consumer price index numbers, and then on Thursday we got our producers price index numbers. Should we take a
We
look?
should, because that was the big jolt for the week, right? Were those inflation numbers?
Absolutely. So if you take a look at the CPI that came in, I'm pulling it up right here on my numbers here, you can see that the consensus was that we would get a 0.3% increase, and instead it was only 0.2%. And I'm looking at the month over month numbers because we're having such a deceleration. I'm not going to say that we're actually getting into recession. We're just slowing down because all of those effects from last year, from those massive rate hikes by the Fed, are finally kicking in. And so, looking at the year over year numbers is kind of misleading because so much has been happening in like the last 3 months. So, I'm just going to be looking at month over month numbers. And so, less than expected, and then when you factor out the more volatile food and energy, still less than expected. So that's actually great news. It means that costs are coming under control. And then if we take a look at the producers price index on Thursday that followed on, this is that wholesale inflation that producers see inside their supply chain and all that. Same thing was going down. So if we take a look over here, the consensus was for a 0.2% increase, only got a 0.1% increase. When you start to factor out the more volatile food and energy, it's less than expected. I mean, this is all great news, especially when you also combine this with our jobless claim numbers that came in on Thursday, which said that, hey, actually, jobless claims were less than expected and less than before, which basically means that there's more people being employed and more people getting wages. This kind of came into the investor mindset this week, basically saying that, hey, wages are finally going to get to a point where they outpace expenses, because we've been having this thing where people have been getting bigger paychecks, but they haven't been able to really enjoy those bigger paychecks because the costs at the supermarket and the costs at the different stores and the costs at the restaurants have all gone up even more than we've been collecting on our paychecks. Maybe it's like giving us signs that maybe our paychecks are going to continue to increase by a little bit, but the costs are going to moderate, and that's giving investors some really good sentiment to move forward this week.
And the moving forward may not even be that much, which is something we've discussed over the past couple of weeks, in that it's like the market's kind of tinkering to the upside, but you're not seeing the validation that you would want. And a lot of people are taking the news in and not necessarily going full force into the market. But all those things you touched on are good. And so the
Mhm.
Fed is going to continue to increase, or do they now have a reason not to continue? And there's a valid point to just pause.
So there's no expectation that they're going to stop. I mean, all these great numbers coming in are still hinting at inflation being more than this, like target that the Fed has. And so the Fed, if we take a look really quick at this probability, this is investor sentiment that what's going to happen. So remember, the Fed is going to meet in about 10 more days, right? They're going to meet, and on the 26th, they're going to give their next kind of, monetary policy focus. And if you can see here, it's a 96.1% chance that they're going to go up a quarter point rate hike. This last meeting they held steady, but it looks like they're going to edge it up. But if they edge up the interest rates by a quarter point, like every two sessions, I mean, that's way better than what they did in 2022, raising it up by like 5% in a period of like 3 or 4 meetings. So this is actually doable, digestible. And I think that what investors are grabbing their head around is that this whole narrative around a soft landing is totally possible, right?
Well, in that case, given your knowledge of the market, when was the last quote unquote soft landing that is kind of comparable?
I'm pausing for a reason there. The Fed is not very good at soft landings. Usually when they take, their tools, you guys have to remember, and we've talked about it on this show a lot. There's really three tools that they have, and their tools are like freaking sledgehammers, right? One of them is interest rates. The other one is this bond buying and selling that we always keep track of. Doesn't hurt to revisit it very quickly. If we revisit their bond selling, they're actually resumed their bond selling, and they're finally to a point where they're below where they were when the banks started to fail. So I feel like the Fed actually thinks that now that we've had a couple of these banks fail, and a lot of people have like put some tactics in place to make sure that that doesn't happen. I think the Fed is feeling comfortable with those tactics that we've put in place, that they can resume their bond selling. I mean, they've actually gone back and said, "Hey, we believe that we'll have the bond selling under control now by about 2026." When they first started bond selling, they said end of 2025. So it doesn't look like they're that far off target. So good for them. And then the third tool that they have, of course, is the just verbiage that they use when they speak. And they've been somewhat hawkish recently, saying, "Hey, we're going to control this inflation, but our goal is to be with a soft landing." Back to your question, yeah, the Fed tends to overcorrect and oftentimes throws the economy into a recession before things start to work out. But times have been a changing. Things The last time that they did that, there was this like blackout where you wouldn't get to talk to the Fed. Now the Fed has been more interactive than before. And a lot of the tools that the Fed would use would kind of be in secretive. And now everything is out in the open. So you're right. They haven't been able to have much soft landings in the past, but things are different, and investors believe, it seems like investors believe, based on their buying attitudes over the last few days, that this is possible.
I mean, it would be nice to see it happen. What's this chart that you got here? I don't think we've discussed this one.
This one hasn't been discussed in a while. This is showing how people's paychecks have been increasing. Overall, again, we know that especially if you've got a job in the trades like plumbers, bricklayers, especially drywall people, those guys are earning a lot, and they're going to continue because there's a shortage of those folks. So if you're in that industry, good on you, because you've got really secure work. If you're in an industry like human resources or something like that, I think you may want to keep your eyes open for perhaps career changes. That's just my own 2 cents. But yeah, overall, incomes have been increasing. But what I wanted to throw out there is when we look at outlays, which is our expenses, you can kind of see that our expenses have been increasing. Let me get rid of incomes at a higher clip than our incomes have been increasing. And so what that means is even though your paycheck looks bigger when you get your pay stub, when you go to the store, that extra money doesn't go very far. So what the reports from this week have been hinting at is that incomes could continue rising, whereas expenses might actually moderate a little bit. And so that extra money that we have, here's our savings numbers. So you can see here, if I pull all these other numbers back, this is savings. Savings is at a high that if I go back, let's see if we can pull this back further. I was hoping we could see it before the pandemic. It doesn't look like I can. Let's see. Yeah, I can't grasp that right this minute, but I think our savings is getting to a point where it's pre-pandemic levels, which is good for people's pocketbooks. So I think things, according to the reports this month, and of course it can change next month, but things are looking pretty positive for both investors and for just the average person here in the States.
The data point that I continue to think about is that the 2% inflation, right? So if things are looking good, like you've described, a lot of the trends moving in the right direction, but it's still not good enough because we're not at 2%. So we got to raise, right? Another interesting dynamic this week, and I don't know if you saw that, was the St. Louis Fed is retiring. He's going to be stepping down, and it was rather abruptly, and he was one of the more aggressive members. So if a replacement comes in that doesn't want to increase as quickly, then that dynamic in itself could really change the storyline. So a lot of interesting moving parts there.
And, the truth be told, I know that we've had almost a whole generation, when I say a generation, about 10 to 20 years of very low interest rates. But, and a lot of people are, because they've been so used to low interest rates, they get an allergic reaction to higher interest rates. But if you really look at and you go back and you revisit your macro and microeconomics 101, 102 classes, having an interest rate is not that big a deal. In fact, it benefits other parts of the economy, like people who put their money into CDs and savings. That higher interest rate is not a bad thing. Having an interest rate around 4%, 5%, that's not actually a bad thing to keep things working well. And so I almost think that we're okay right now with this interest rate, and having a quarter point increase or decrease here or there is not going to set off investors or even the everyday person. I think this Fed is trying to rewrite the norm of the last 20 years and bring it more into alignment with the overall norm. But I agree that 2% number is kinda, if you look at the history of it, it's made up anyway. It comes from just, it's randomly picked out of the air by not even the US, but it was actually came from a New Zealand, a thing. So I'm kinda bummed about that, but I get where the Fed has put that line in the sand, and in order to continue with their own building of credibility, they've got to stick with their goals. At least that's their thoughts. So I get it, not happy with it, but we'll continue moving forward.
We'll continue to keep an eye on it. Before we move on with the rest of the show, I did want to see if we could take a look at the overall market, because
Mm.
on previous episodes we have been calling out this sluggish increase, and I just wanted to get a gauge of what this week's positive news is doing in terms of the technicals.
All right, so let's look at the S&P 500, and let's go ahead and I place a lot of emphasis on retracement. So if we take a look, let me go ahead and pull up my ruler here. If I pull up a ruler from here, Let me actually verify that I've got my snap on. I put my snap back on with my drawing tools. That's important. So if I go from this close, there we go, to this close, you can see here if I put my cursor right here, we retraced where I wanted us to retrace to, which was somewhere in the center of the previous expansion. So I'm very happy with that. That's what we call an ideal retracement or an ideal contraction phase. So good stuff there. This piece of the puzzle would be our current expansion phase. So if I move this drawing right here and I measure the last contraction phase that we were on, these are all confirmed. And I look at the current expansion. The expansion is way more than our threshold. So this is considered already, even though it's unconfirmed about where the high is going to be, this is considered a very good expansion that we're currently in. So yeah, we're starting to kind of jump on the bandwagon of an ideal uptrend rather than this one that kind of has false starts. What that tells me, we've been in an uptrend that has been less than ideal. Let's see if I can, since, well, it looks like since March 6th. And it looks like I've drawn in this lavender line or magenta looking line here. We've got two tests of this support level that's at a higher level than the overall channel. And so I'm leading this moving forward to see if we can get a third test. If we get a third test down to this magenta level rather than this cyan level, what that tells me is that there's a little bit of a consolidation in the channel, which is fine because I'd rather have an ideal channel where the contractions and the expansions are falling into our ideal parameters rather than worrying about where exactly is support or resistance. If I get 3 tests of support at this higher level, fine. That will define my new channel, especially if it's an ideal channel. So things are looking really good. Again, I caution we're about 75 points away from that 4,600. That 4,600 and then that 4,800 has some massive overhead resistance. But if we blast through those two levels, 4,600, and then maybe by the holiday season, winter holiday season, we get through 4,800, man, I'm taking my gloves off and I'm going to start swing trading again because we'll be in a nice bullish trend.
And at what point, like, where are we year to date, essentially, for the market as a whole?
Year to date, we're up. If we go back, if I take a look at, going back to the end of December, here's the year, this little dotted line here, we're definitely up. If you take a look at a little bit of a bigger picture, this is from our all-time highs. All-time highs were about 4,800. And like I said, we've got some pretty massive resistance as well at 4,600. We had a lot of buying up to the 4,600 level. And since that time, you can just imagine that all those investors that bought into the 4,600 level have been white knuckling it, waiting for that moment where they can be in the black again instead of being in the red. So I wouldn't be so surprised at 4,600 if a lot of those investors who have been white knuckling it say, good, I can finally break even and get away from these risky investments. I'm taking my money out. I'm glad that I got my money back. I'm going to go put it into bonds or something like that, or put it into my mattress, or bury it in a jar in the backyard. So I expect some selling at 4,600. I also expect a little, actually less selling at 4,800, which could stop the current uptrend temporarily. But we'll see what the tried and true investors think about the situations at the moment and see if they can counteract that selling with enough buying to keep the uptrend going.
Yeah.
It's a wait and see game.
And I imagine that level between now and the all-time highs is gonna be quite the battle, right? We're gonna need a
Mm.
lot of momentum to break through that, at least
Positive
not even
news,
this
yeah.
year, maybe even early next year. And so, the reason that I think that's important for us and for the show is the strategies that you implement are used to take advantage of these areas at where we're going to see consolidation, where we think there's going to be some opportunities to put an order in. If it breaks through it, great, we'll take a little bit. But if it doesn't, we're also going to take advantage of it. And so that's a concept of premium selling. But there's a lot more. There's a lot of ways to approach it. And if you're watching this, listening for the first time, and you want to learn more, you want to get the details, AJ has a wonderful daily workshop where he goes over examples. He goes through trades, he goes through the psychology. We're going to go ahead and throw the link to this in the chat, so head on over there and check it out. This is a live show, so if you have a question on a particular name or topic, feel free to throw it into the chat, and we will try to get to it as soon as we can. Coming up, we've got our trending topic. We've got AJ's pick of the week. We've got the speed round. We're going to take a quick break. We'll be back in a few seconds, and we'll go into talk about some trader psychology. So sit tight.
I get it. You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
I'm curious as to how you decide on what your beard is going to look like, because in that video we had the full beard. We've got a couple videos with the goatee and the what do you call the one where you go like that? What is that? That's
I call it a biker mustache.
yeah.
That's when when I'm feeling the need to feel macho.
Oh, so today you're feeling sailboat weather, right?
Well, the truth is it's summertime. It's the summer doldrums. Summertime, you don't want any hair on your face. At least I don't. So I go for the cool the clean shave.
Well, you certainly don't look your age, sir. So keep it up.
Remember, I turned 50 this year.
Yeah, the big 50 with another 50 ahead of you, my friend. Uh,
Oh, I'd love to join the Centurion Club.
all right, so let's keep the party going. This week's trending topic is one that I believe a lot of people, a lot of investors, a lot of new traders, a lot of veteran traders experience, and that is the psychological aspect of trading, and then the differences in active trading and the more common passive trading, which is what we talk about here on the show. And so, AJ, I guess my question to you is, when you get new investors that approach you and they're like, what psychological component do you explain to them first? Because I imagine you kind of go over that before you go into any of the technical stuff.
Yeah, I tried to, and I actually think active investing is the more like when people think about trading, they think about actively trading, like turning it into a job. I think that we're all programmed. A lot of us are programmed to think in terms of if I trade my hours for income, right? The typical model of I work 8 hours a day and I get this much per hour of my time. And so they like to apply that to investing. And so they like to put in the time. Well, investing is actually by definition having your money work for you. And so I almost want to apply investing philosophies to trading rather than thinking that, I want to dispel the myth that if you just put a lot of time and actions into your trading that you'll make money, because the truth is I ran this experiment. I actually had one of my participants. I didn't. His wife did. His wife said, "Hey, listen, you're retired. I get that you're trading now, but I want to go travel the US." And so they got themselves, I think they rented one of these mini Winnies or something like that, these mini Winnebagos, and they hit the road. So before they hit the road, he was doing something like 30 to 50 trades per month. So he was a very active trader. And because of the limitations of being on the road and having to drive from destination to destination, he just couldn't physically be that active. Now, I had been telling him for years, don't be so active. You're not increasing your win ratio, and you're not increasing the amount of reward each time you do win by being this active. In fact, you're almost self-sabotaging yourself by always hitting that trade, that buy, that sell button. But it was his wife forcing him to be behind the wheel and not be in front of the computer that caused his numbers to go down to more like 10 to 15 transactions per month. And guess what? His win ratio went up and his reward ratio went up, the amount that he got per trade. And the reason is because he was limited to the amount of trades, he had to think through things a little bit more, and he had to be a little bit more systematic and a little bit more thoughtful about what he was doing, and it turned out to benefit him. And so that combined with just the psychological in front of an active trading session, it's almost like when folks go to Vegas or any sort of casino where they have all the sounds and the activity, and ding 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 ding, bang, na, 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 na. You start almost like the reptilian mind kicks in. And I know when I enter in any of those facilities, I automatically start reaching for my wallet, right? I'm like going to go get the tokens and I'm going to start gambling. So you want to like counteract that mentality. And so I've coined this phrase called passive trading, where you use a lot of the automatic trading functionality of these new platforms, and you kind of do all the thinking outside of the trading hours and pre-program your automatic traders in order to do what you want them to do during the next trading session, and you intentionally don't be there. So think through uh, uh, what needs to be done. You also hear about some of the most successful real estate investors that go to these foreclosure auctions, and you'll see that some of their suggestions is that you write your things down and you stick to the rules that you give yourself about how much you're willing to pay for something that's on the paper, and don't deviate. Don't get caught up in the auction. Same thing. If you program those bots to do the trading as you are thinking about when the session's out, when your mind is clear, I mean, this is one of the ways to not get yourself into trouble and not wind up being in situations where you're white knuckling it. When you start thinking through your strategies and you stick to your trade rules by actually hard coding them into these bots, it makes life a lot more easier, and it plays true with the idea of now making your money work for you. As a side effect, it frees up all your time during your day to actually live your best life.
And when you say these trading bots, I don't want the viewers to get overwhelmed by that, because they're not so sophisticated and difficult to manage. You're really just telling it to buy or sell or exit at this price in the future at a given date, right?
Yeah,
It's not like super science. And
no,
what's cool about what you do and the philosophies at Trading Trainer are that options kind of are bots in their existence, in that it's this thing, it costs this
absolutely.
much, in the future it'll be that much, or it won't be that much, you owe this person that, boom, we move on, times thousands of names across different products. And the passive part is utilizing them, putting them to work, and hopefully doing so at a profit, right?
Mhm.
And that's what we'll go over the rest of the show. We'll continue to look at some names where we're going to be applying these passive investing strategies to
Mhm.
hopefully profit, right? The other advantage of the bots is that you have a parameter on your loss too, right? So like the ding ding ding, it can only go so much, but then the reverse is also set. So your emotion is more middle ground because it's like, 40 up, down 10. I can go to sleep at night and not have to stress over going to my screen and checking that every, few hours.
Yeah, you're preaching to the choir. That all of that's true. Options have built-in parameters with their strike price and their expiration date that you use to your benefit, and setting in those automatic bots gives you a predefined amount of risk so you don't have to worry about unlimited risk. I mean, that's absolutely the way that I teach to trade, and it's much more time freeing, allow you to do what you want to do. If your wife wants you to drive cross country, you could be present and have, that great time with her. If you've got a passion, like I've got my charity that I run, if you've got your personal passions, if you have family life, it builds all this time for you while in the background, all of this money making is taking effect. It truly gives the definition of letting your money work for you feet, credibility.
All right. Well, let's go through a live example. Let's pull up
Mhm.
a potential opportunity. And so your pick of the week this week is, I believe this is a new name. I don't remember covering this one. And the name is PERI Network, ticker symbol
Mhm.
PERI. What's the scoop there, AJ?
Well, a background on this company. This company is a company that does like advertising and branding, focuses a lot on the computer side of things. So, ads and SEO, search engine optimization for different bigger brand names. So, Perion is behind the scenes for a lot of these ads we see on our Facebook feeds and things like that, or on our Google results and things like that. So Perion is in that pattern that I really, really like, which is a sideways choppy pattern. Now, this is a pattern that most traders don't know what to do with, but us premium selling option traders love because we can create an income stream off of these patterns. Perion does result. They have been giving you know earnings, quarterly earnings announcements saying that they are making money. In fact, they're making a pretty good amount of money. So this is great for the longevity of the company, which means we can create an income stream off of it without worries about speculation or any sort of confusion on investors and will this company ever make money? They are making money. So, coming to the technicals, we always look for this sideways choppy pattern. We like there to be some sort of delta between support and resistance. So, if support is down here at $30 and we see tested resistance up here at $36, this, by the way, is a channel width of about $2. I'm sorry, $6. And if you take the average channel width, that's between 30 and 36, that's about $33. So six, I like to calculate the ratios. 6 over 33, that gives us something over somewhere between 15 and 20% ratio of width to average channel price. This is a great pattern for us to turn income in. We don't want that number to be too small. We don't want that ratio to be too small because what that means is we've got some consolidation going on. Investors are confused. And so they start to get nervous, and that could lead to breakouts, which is what us premium sellers, we don't like breakouts. Yes, our strategies self adjust for breakouts and they take care of themselves. But if we can have something that just goes up and down between support and resistance for the longest time period, we can totally create for ourselves a just reliable income stream of, I call them instant dividends, but it's just every time an option expires, we get to collect the premium. So this is one of those candidates. And I'm right here looking like we're about to form a top. I haven't got the signal yet. I expect to get the signal either this evening or maybe Monday evening that a top has been found. I'll make sure that there's some validation to that signal. I'll look for volume. I'll look for any other secondary indicators that'll give credibility to that signal. But this is a perfect opportunity to either short shares of Perion or to buy a back month deep in the money put option, which would be the replacement to shorting the stock. And getting either one of those would be an initial covering position in place so that every time that this symbol bottoms around $30, some put premium and create income out of those sold puts. Sell the put premium, and then we could also add a secondary trade, which would be a protective call that we can then create an income out of as well by rolling out those protective calls. Every time we roll out those protective calls, we get a secondary source of income into the economics of this trade. All word salad to say this looks like it's setting up really well in the next couple of trading days.
And your preference would be to short or to sell the puts, and why would you choose one over the other?
Timing, simply timing. So I could do both. So the scoop is I'm currently forming a top, and this does look like a nice sideways channeler. In fact, if I go back in time a little bit just to give myself my own peace of mind, you can see here it's been in this sideways channel between about $30 and $30. So with that said, right now we're forming a top. And so what's beautiful about this premium selling strategy that we keep talking about is no matter you can get a trade going. So in order to get a trade going when we're at a top, we short the symbol and or buy some back month deep in the money puts. If we were at the bottom, we would do the opposite. Again, this trade is based on expectation that it's just going to continue going sideways. So it really doesn't matter whether we buy the stock down at a bottom and sell call premium, or if we short the stock at the top and sell put premium. So basically, I'm at a top now, so it only makes sense that if I want to create an income off of it, I'll short the stock or I'll buy that back month put to get the ball rolling.
And it really just depends on one's portfolio size, which one might have a bigger effect. And you said this is at $33. That's what we're trading at. So maybe a little bit more in the mid price range for some of these positions.
Yeah, let's see what the if I was to substitute that stock. Plus, some people are not dealing with a margin account. So if you're not dealing with a margin account, you're not going to be shorting any sort of stock. You need a margin account to short. So if I was to use a substitute, I would come over here to these put options. These put options are something that I can buy with a cash account. And it looks like if I'm going deep enough in the money to make it, I basically want to look at something like this $50 or even this $45. I could probably get away with this $45 strike price put. And again, I want to go out as far as I can. The farthest out option for this Perion network is my January 2024 leap. I'd pay roughly about $10.40 per option share for this thing. And so that's a lot cheaper than the margin requirement on a $35 stock. So if I wanted to do some leverage, that's what I would do. If I have a cash account, that's what I would do. I would probably use this $45 put option out in the January 2024 expiration.
All right. Well, that breaks down AJ's pick of the week, Perion Networks. keep an eye on it, add it to the watch list, check in with us next week. We'll see if it comes to fruition, but some trades do, some trades don't. That's why we are constantly looking at a variety of names, and that's why we give you, the viewers, an opportunity to help us out, throw some names out there, give us some ideas. And so with that being said, let's dive into the speed round. I believe this week is earnings week, starting off with a lot of the banks, which gives us a little bit of insight on this next name, and that's Morgan Stanley, ticker symbol MS. And this is Jackson from Laramie, Wyoming. Morgan Stanley, which bank, investment bank, trading firm, all that jazz.
Yeah, it looks like earnings is coming up next week before market open. Let's see if today's the 14th, 15, 16. That's going to be Tuesday morning before the market opens. They're going to report. Listen, when it comes to the earnings, I think I'm going to hold off on selling premium. So I can see that Morgan Stanley, usually investors don't phased by earnings. I'm just looking at the last two earnings reports. There's a little bit of a drop, like $1 or $2, but then the investors get back into the groove. But still, I don't want to get into a trade where there might be some uncertainty. Remember, these premium selling trades are really based on something moving consistently sideways choppy. So I could wait until earnings is released next Tuesday and investors digest those results and start thinking about selling those premium. But one thing I'd like to do just really quick on this is let's look back at the implied volatility numbers. This earnings last time was on April 19th. So I'm going to use the historical lookup here on our options analysis tool. I'm going to put in Morgan Stanley, and I'm going to go back to April 19th. And here's what I want to look at. Let me get rid of this view here. I want to look at this near-term option. In fact, I could even see myself looking at the weekly options. There we go. Because my expectation or my belief is that if I look at the at-the-money options, let's just look at an at-the-money call, for instance, and notice this number here, this implied volatility is 23.13%. And then I look back a day earlier, notice this. Notice that same, so again, the at-the-money option, which in this case, let's focus on the $90 strike price, 23.13%. This is the day. So remember, they like to report their earnings before the market opens. So this is right after they reported their earnings, 23.13. The day before, when folks were unexpecting, notice it's up at 49.43. So what that tells me, SIP, is that investors get very excited with anticipation. That's what this 49.43% number is telling us. They get very excited with anticipation. And then once earnings is released, their excitement calms down. And with no other investment vehicle in the world can you take advantage of this phenomena, but with options you can, right? So I'm almost thinking for our friend Jackson and Laramie, let's play volatilities on this. Let's see if we can earn some money on the volatilities. And so a way you could do that, Jackson, I don't want to spend too much more time on this, is let's look at a calendar spread. This is a horizontal spread. This is where we buy an option that's way far out in time, at least 3 to 6 months out, and with a strike price that's at the money. And then let's sell one that's, you could use the weekly options. Let's sell, in fact, July 21 is just coming up. I was going to say, let's sell one at the strike price, same strike price as the one we bought, but that's going to expire in the next week or two. So let's use the July 21 coming up. And that July 21 is going to be at a high price. And so we're going to sell it at the high price, and then it's going to drop the day after earnings down to a low price. That's when we get rid of our calendar spread. In fact, Sip, let's go ahead and put this on our radar to revisit next week, because I want to see how this particular trade would have worked out. In fact, I may even trade this one, because that's how I think I would do this in the short term. I would go ahead and apply this calendar spread probably on Monday and then sell it on Tuesday.
Wow, that's a 48-hour opportunity using our AI robots and having a defined risk and reward.
Yeah.
So I mean, love it. Love
You can't
Jackson.
do this. You can't do this type of trade with anything besides options. It's one of the cool things about options. So look into a calendar spread, Jackson, at the money calendar spread.
Awesome. Love it. Thank you, Jackson. Moving on to our next name. This is Emma from Poughkeepsie, New York, who's interested in something that's really in the news this week, and that is the media industry. And this is Paramount, ticker symbol PARA, a company that is dealing with the new actors and writers. Well, the writer's strike isn't new, but the actors joined the party as of yesterday. And so everybody's striking, but they still need content to stream. Is this affecting the stock at all? Is there an opportunity here? What are we gonna see? What's the data telling us?
Okay, so first of all, you're absolutely right, and you're probably seeing it firsthand being in Los Angeles and all. That would be catastrophic, wouldn't it? If the actors decided to actually go on strike. I mean, the writers have been on strike before, and that's not that good of a deal. But imagine if the actors actually went on strike. These content providers wouldn't have anything for the fall season. And the fall season is usually the biggest season, isn't it? So, with that said, almost intuitively, I want to think about shorting Paramount, right? Um,
Well, maybe that's what
looking
that drop is, right? Maybe that drop is the news.
Yeah. And looking at the technicals, so now I'm going to switch gears here. I've got my resistance probably around $17. It looks like I've got my level of support could be around $15. So again, that's a $2 spread with an average price of 16. So $2 over 16, that gives me a ratio above 10%. So that's still good. So I'm forming that top. So just like we were talking about with PERI on networks, this is a perfect time to be shorting this underlying symbol, which then also goes with our intuitive idea that shorting the symbol is probably a smart idea right now. And then when it bottoms, wherever it bottoms, I could sell put premium and start creating an income trade out of this. And by the way, if it goes past the bottom, past this level of support, because God forbid something goes on and Paramount just tanks, you're in a shorted position. Shorted positions are the ones that profit when things tank. So whether or not you actually do sell the premium or whether you cash out of the shorted position when Paramount drops, you're protected either way. So I think that this is what we would do here is I think we're going to set up our initial covering position fully knowing that we may not use it. Instead, we may wind up trading it directionally.
And hope that the actors come around so that we're not looking at robots in all of our favorite shows.
True.
All right, Emma. Thank you for Paramount, AJ. It's a decent opportunity, probably more one to potentially paper trade. Keep an eye on, but it's definitely going to be something in the news.
It is a speculative trade. You're right.
Disney is in that, Netflix. They're all dealing with the same, and they all may be having some sort of correlation directly related to news
What's
events.
Netflix? NFLX? $447. Disney, DIS, $89. What's nice about Paramount, just to throw some extra excitement your way is it's at an affordable price, right? $16.11. So that is also a benefit for us who like to kind of involve the stock into our strategy.
Well, if I get some more updates over here on my end, I'll be sure to let the viewers know. But a lot of the people that I engage with, I see them at the picket lines, and it hurts my brain a little bit. I wish we could just all get along and work and create beautiful content. We'll see what the fall season brings for us.
And can I just throw in one more thing? That reminds me of the movie. It was called The Big Short, and it kind of described these investors that saw the Great Recession in 2008 coming around, and they decided to short it. And one of the things was, yeah, they made a buttload on the recession because they foresaw the recession happening and they bet against any future gains. So they made money on it. But one of the things that I remember, I think it was maybe either Steve Carell's character or oh gosh, what's that actor's name that's so amazing? He's a method actor. Oh, Christian
Christian Bale.
Bale. He said, "Listen, we made a crap ton of money, but don't celebrate it because it means that everything went down." So me telling Emma that we should short Paramount, I mean, that's setting you up to profit on the fact that maybe the actors and the production companies don't come to a conclusion, and so it would be bad for them. So with options, we can profit if the market goes up or down, but do remember kind of in the back of your mind that when we profit on something going down, like when those hedge funds were really betting against GameStop, it was going to affect a lot of people. And some of those retail investors who had a passion for GameStop, they got back together through Reddit and they decided that that kind of sucked, that the hedge funds were burying GameStop in short trades, and they did something about it. So just remember there's real people on the other end of our investments.
Yeah, and if any actors are in a position where they're concerned, maybe you could hedge yourself with some options on some of these names. Hey, just throwing it out there. All right, moving on to our third and final name in the speed round. This is Liam from Fernie, British Columbia, Canada, interested in tech app name Bumble, ticker symbol BMBL.
The dating company, the
You know,
dating app.
back in the day, in my single days, it was all right.
I did some bumbling. I did some bumbling before I met my wife.
Well,
Although
they
I
have
didn't meet my
the
wife through Bumble. I met my wife through our Pilates teacher, but that's another story.
yeah, and they have all these friend networks, make new friends, sports people. But let's dig into the technicals and see if there's an opportunity to make some money.
Listen, Bumble was in this tight trading range, which actually concerned me. One of our program participants brought up Bumble a couple weeks ago on one of our Thursday workshops where we get together and plan trades together. And I kind of nixed it then, and I'm glad I did, because when you see a candidate consolidating like this, I think I mentioned it earlier in the program, investors are uncertain, they're confused, and they're easily swayed in one direction or another with just the smallest little tidbit, the smallest little tinder thrown into that gasoline fire, right? And so that's what happened. We had a breakout of Bumble. Give me 1 second here. I apologize. There we go. We had a breakout from that consolidation pattern, and that would have set our premium trade on fire. As far as trading breakouts is its own beast, and it's really hit or miss. And it's a very speculative way to trade. I wouldn't put a large portion of your portfolio into a breakout trade. And this particular breakout trade on Bumble has come and gone. You had to have been in there about 5 days ago. So I'm going to say let Bumble calm down, see if it forms into a tradable pattern. But for now, I would put Bumble back on kind of your watch list that you check in with maybe once a week, once a month, or as needed. It's not something I would want to trade right now. I definitely wouldn't want to chase this breakout that has occurred, but it is a perfect example of why we don't sell premium on consolidation patterns, because they do indeed break out. Thank you for bringing that to our attention.
Yeah, and from a product side, I imagine there's a lot of competition. It's not like they're doing anything super innovative, but they've done a great job of branding and taking the female perspective to their product. So we'll keep an eye on Bumble. Maybe something will play out, but it looks like it's one of those consolidation names, which isn't as appealing as some of the other examples that we've gone over. All right, that's the speed round. This is episode 89, the AJ Brown Show. Heading into the weekend, AJ, heading into next week, what should we as investors, as premium sellers, be keeping an eye on?
I think we want to take a look at the earnings season. I really liked that Morgan Stanley trade that Jackson brought to our attention. I think there's other trades like that. And so, coming back to our trending topic of the day, it's around earnings season that I'll get a little bit more active, wanting to trade some of those volatility plays using these cool things called options. So if you're into those type of trades as well, earnings season, I mean, in a single earnings season, you could totally, float yourself until the next earnings seasons. I know good option traders that will trade literally only the earnings season. And so every quarter, that's when they become active, and the rest of the time they take their time off. I kind of do both. I do the passive trading with the premium selling, but I also like to jump in on these earnings season because it's such a predictable trade where people get anxious ahead of earnings and then calm after the earnings is released. And options allow us to profit on that. So I'll be focusing on those. I'll be focusing on a lot of these candidates that are releasing earnings.
And with earnings season just beginning, it sounds like we have a couple of weeks of opportunities in the summer doldrums. If you want to stay a little bit active, that's something that you should take into consideration. All right, AJ, thank you for your time. Everyone, if you've enjoyed the broadcast, hit that like, hit that follow, hit that subscribe button. If you have any questions, feel free to drop it in the chat. Feel free to send us a DM. If you haven't checked out AJ's webinar, the link is in the chat. Head on over there, sign up, get some more info. Otherwise, take a break from the screens this weekend. Enjoy the summer. Spend some time with your family. And then next week, when the markets reopen, we'll get back after it. All right, AJ, I guess we'll call it a day. Thank you once again. Thank you, everybody, for tuning in. We'll catch you guys next week.
Bye, everyone.
Thank you for tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe button and we'll get you fresh content daily.